Hi, I'm Pattu from freefincal. Let's take a look at 4 mid-cap funds that have outperformed the Nifty Next 50 consistently. This is in relation to the plumb line list, the handpicked list of mutual funds that was released for the last quarter. I had mentioned that I'm going to revise my study of mid-cap mutual funds and small-cap mutual funds versus Nifty Next 50. I had last done it in June or maybe a little bit before that. I don't remember. So I thought I'll revise it for this quarter, and this is with respect to mid cap. I'll be doing the small cap analysis in a couple of days. So this is with respect to Nifty Next 50. Before that, just a couple of announcements. I had just posted the Nifty 50 stocks with weights for October 2020. Reliance now occupies almost 15% of the Nifty 50, which is a little too much in my opinion. And then I had posted in the morning about 40-year-old government bonds that with 6.8% interest that's going to go on sale again between 6th and 7th of October 2020. The auction is on the 9th, but you have to bid for it via NSE Go Bid on the 6th or 7th of October. And yesterday I had posted a very a response to an interesting question by a 21-year-old where he says, my salary is too high, what should I do? So that's an interesting problem. You can have a look at these posts by going to freefincal or going to the YouTube community channel for freefincal. So let's get to this mid-cap post. And we are going to look at rolling returns as usual for 1, 2, 3, 4 and 5 years. We have 22 mid-cap funds for this study. We're just going to get rid of mid-cap funds that do not have too much history. For example, any mid-cap fund that does not give you more than 1,000 points for a 3-year history. If you look at the 3-year history period, there should be 1,000 3-year returns in the history between 1st January 2013 to the current date. So anything that does not that doesn't have this kind of history will be excluded. So those are the fund, the DHFL fund, the Edelweiss, IDBI and Mahindra. So if you look at 5-year returns, 12 out of 19 funds have outperformed the Nifty Next 50 with a consistency of 70% or more. What this means is, for example, if you take DSP Midcap Fund, there are 676 5-year returns, and out of these 676, all the 676 returns of DSP Midcap were higher than Nifty Next 50, so the performance consistency is 100%. If you take HDFC Midcap, 495 out of 677 5-year returns were better than the Nifty Next 50, so the performance consistency is 73%. So out of 4 years, only 6 out of 17 funds managed 70% or more consistency. Over 3 years, only 4 out of 17 funds managed this. And if you consider the 4 funds that managed to qualify over 5 and 4 and 3 years, they are L&T Midcap, Kotak Emerging Equity, DSP Midcap and Invesco India Midcap funds. Now the point I'm trying to make is, please don't go rush and put your money in this. It's just 4 out of like 20 funds or so in the category, and that means that this is kind of, I mean, it bodes badly for the future in my opinion. I think an investor is better off in a Nifty Next 50 index than in an active mid-cap fund which is going to perform well one day, then next day it's not going to perform well and so on. It's too frustrating to hold it. So that's what I've been saying for a long time. At least with respect to the mid-cap space and small-cap space, definitely a Nifty Next 50 index fund is going to make it worth your while. So of course, with respect to the large cap space, clearly Nifty is a good choice, though. The only trouble is the over allocation to the just a few stocks, but that's always been a problem. But when just these stocks do well, then it's a problem. When the rest of the market is not doing well and just these stocks do well, it certainly is a problem to consider in the whole context of everything. Bye bye.